I hope that you are doing well. Thank you for joining us this week. To you clients who did dial in to the Tuesday, Wednesday, or Thursday client update, we had a great conversation. In that, I dove into a lot of details on some topics that I want to give you a high-level update on today. Now, in that session, we nerded out. I enjoyed looking at the details of the economy, looking at the details of the market, because we want to make sure that we're doing our job looking at the facts so that we can best serve you in reaching your financial goals. And so today, I want to give you a 3 to 4 minute update of what are we seeing happening in the economy and the markets right now, and what do we expect in the future, and what are we watching in the future. So we know that all over the world today, we're dealing with the economies of the world are dealing with inflation. Very sticky, very stubborn inflation. We know that we have a slowing economy. We have problems in Europe, both with a war in Europe and a looming energy crisis. There's saber rattling going on in the Pacific. We also know that there's a midterm election coming up that can affect a lot of the headlines, which can in turn affect the markets. But when we look at the economy and we look at the markets today, we see three things. We see very sticky inflation. We see a Federal Reserve that is trying to dig that inflation out by raising interest rates. And we believe that they're going to raise the interest rates to 3.5% at least. That is going to cause a slowing economy to slow even faster, possibly tip into a recession. Stocks have really rallied this summer, but they very much could tip over and fall very hard through this fall and early winter. We'll be watching for that. Number three, we got a very stubborn Fed that they are going to attack inflation until they dig that out of the economy and win. And even if that pushes the economy into a recession, they have said this publicly and they are sticking to it. So what are we watching before we really say, hey, it's all clear, there's a true light at the end of the tunnel, and we think that we can pivot back and look for some serious growth in the future? That day is coming, but we want to let that be data-driven in our decision. So here we go, 3 points. Number three, 2 and 1. All right. Number three is we want to see 3-month positive leading indicators on economic data. Leading indicators give us the data that is today. So we want to see 3-month positive trends. We also look for 3-month positive trends in bonds. Number two, I want to see the 200-day price average on stocks. We'll see stocks that tip up above that line, and we want to own those stocks at that point. And number one, we're watching for the Fed to pivot, to stop raising rates, and at least pause, signaling that probably later next year they'll be lowering interest rates. When we see those 3 points, we believe we'll see a real light at the end of the tunnel, and we will see some growth in the accounts again, some really strong growth in the accounts. So right now we're playing a lot of defense. You may be seeing a lot of trading, but we believe this is a good time to just get out of the way of a falling market, even one that has rallied strong this summer. So we appreciate the trust that you put in us. We're going to keep digging into this data and doing an excellent job for you. Take care. God bless.